welcome to my channel, Training Blunders and Journey to Success. Like many of you that have probably been dabbling with stocks and trading or simply picked it up recently with COVID, I've decided to jump on that bandwagon as well. And while I have traded for many years now, it's really the last couple of years that I've really focused on the financial analysis, the technical analysis, and understanding more on companies. Of course, like everything, nothing comes easy. And, if success is guaranteed, everybody would be a millionaire. I've started my journey with understanding from friends what they do, and then from there, looking at YouTube channels, reading up. I think, like everyone, um, I know many suggest you start with a paper account, a trading account, but I decided to put a small amount of money and actually start trading with real money. Um, for the right or wrong reason, the idea was that when it comes to real money, the emotional element of it is real. So, when you lose, you lose something tangible. Again, everybody has their ways. This is just the way that I followed. In terms of this channel, this is the first video. If you're here, welcome. The idea of this channel is really a learning tool for myself to revisit the errors, the mishaps, recheck my strategies and conditions and emotions. And then for those that arrive here also, this is intended really to show you another way of learning, and I hope it helps. I do want to say that this video is not intended as financial advice, but rather represents my own opinions and really intended for learning purposes only. My intention is every week post some of the trades that did not go the way I wanted and really dive into some of the reasoning of why I decided to jump into this trade, and then also what happened. For today, I've decided to look at a company called Marathon Oil. And for those that haven't heard of Marathon Oil, it's a company that does exploration and production of hydrocarbons, natural gas, mainly in the US. This is a company that I've seen on and off for sure. So it's something. It's I guess a ticker that it was not really much of a surprise for me. Like I said, I've heard a lot of people talk about it, so it was on my watch list. And this is why I said, okay, you know what, this is probably a good one to dive into. In terms of why, so the trade that I want to talk about specifically is a trade that I put in the beginning of the year, actually beginning in January. Most of these trades are options, so it was a call option for a $20 strike. My intention was really a short-term trade, so the expiry was January 21st. I will say this, of course, one of the learning that I have is when it is such a short time frame, it's very easy to lose money. For those that are starting with options, of course, the downside of option is at the end, if you don't intend to buy or sell the stock, basically you're left with nothing. You really lose all the money you put in. So in terms of why I decided to dive in, so I bought these options on firstly on January 4th. And the reason for that was, if you look at here, from the beginning of the year, Marathon Oil was starting the year off strong. Uh, the days before, it was strong green candles, and it was starting to hit basically its all-time high of around $18, $19. And there was a lot of uh, talk about, from a forecast point of view, extreme cold weather, and then also driving fuel prices higher. So this was a big element, and also because there's been several analysts that have been talking more about the stock and its earnings coming in. I think it was January, February. I figured, it looks like it's going to pick up momentum and really move to the upside. Um, I guess the good thing is in reality, it did end up moving to the upside. So you see, it did actually get to the $20 strike. Now, the reason for my mishap was not really the entry as much as it was the decision after. So, like I said, what I did right off the bat is I bought in on Jan 4th, my first entry, and then Jan 12th and Jan 14th, again, another couple of entries. And things were going well. On Jan 18, I decided to sell some. So I actually sold, right at the start. So you see here, actually a good start, and it was right at the 20. I sold a third here of my holding, and then I sold a third here. So now the mistake that I made is one. I guess very few people say this, but just in all transparency, I didn't pay attention. I actually thought I had sold all my holdings, and then after I realized, I actually still have a third. So as the day passed, rather than actually selling the remaining for some profit, I decided to actually buy in more. So you see here, even though it was a big red candle, I said, okay, you know what? Let me buy in more. Why? Because in the morning, the option actually hit kind of like a 42 cents. So, and it was coming down till around 37. So I said, even if it goes back to the day high, you know what? I'm going to make some money. But, again, it continued to go down. I continued to hold. And then again, I decided to buy a little bit more here around midday. Now, again, in hindsight, I think one of the first learnings I took away is when I first started, I had a strategy and a profit target. And in fact, my first exits were right on profit target. So, you know what, if I had paid attention, sold all my holdings then, I would have walked away, well. The second thing is, for that day, a lot of people talk about, once things start to go down, averaging down may not be the best strategy. In this case, it wasn't, because as the day passed, the average cost for it while it went down, but it never made it back up. It never made it back up again. And then in the long run, if I go back to the top, you'll see that it was already quite higher than its 20-day moving average. So, it was already quite overextended. So, more likely than not, if we see from the past, as it extends higher, it starts to either consolidate, get back closer, and then it rarely explodes that much higher. So, looking at historical, you know, it should have been obvious for me that more likely this thing may retrace back, coming back to its 20-day moving average, and then because it's an option, maybe buying back in would not be the best idea. In the end, I think by the time I had sold, I had wiped out the gains that I made, and I even actually walked out with some losses. Um, one of the learnings that I took, one, if you have a strategy, you got to stick to it. Two, make sure you know exactly how much you're executing, how much you're buying, how much you're selling. And then three, the emotional factor. When things started to go down, before rebuying in, just like I had a strategy to buy the first time, I should have sat back and retested that strategy to buy versus buy on emotion here. Anyways, so that's it for this trade. Um, I hope it helps. If you like this video, don't hesitate to comment um, or share your thoughts. Again, this is intended to help us and everyone that reaches here. And I guess I'll see you on the next video.